Hey guys, what's up? How's it going? Robin here. Welcome back for another video on the channel. In today's video, there's quite a bit going on in the stock market today, so we're going to give you guys a quick little update inside the portfolio. I thought it'd be a pretty good time to do a video, and we can cover a bunch of different things. So I'll show you guys the stocks I'm buying. I'll give you guys a quick little recap of the entire week, and of course, I'll show you guys how my dividend investing portfolio has been performing since the recent dip in the market. And just really quick, before we get into the video, if you guys do enjoy the video and you guys enjoy the channel, be sure to smash the like button. It really helps out the channel. And of course, remember to subscribe if you guys want to be notified of when these videos go live. Hey guys, what's up? How's it going? Welcome back for another video on the channel. So lots to talk about today, lots of interesting things going on in the market. If you guys watch my channel and you've been following these weekly updates, you'll know that my portfolio has went down quite a bit over the past week or so. And even today, we've actually seen quite a significant dip in our overall markets here. So on my watch list on Wealth Simple Trade, I have two stocks here. These are two of my big ETFs that I have inside my portfolio. One VDY, which covers a lot of the Canadian stocks, and then VFV, which covers the US market. And we can see today, both these ETFs opened pretty low. VDY dropped down negative 2.62%, so big drop in a lot of the Canadian banks and different financials. And then VFV, which is the S&P 500, we've seen a dip of negative 1%. And the past couple of days, we've seen quite a bit of dip from there. So obviously, our portfolio took quite a big of a hit, but that's okay because then we can buy these stocks at better prices. And because we're dividend-based investors and we're focused on yields and different growth and stuff like that, we can always buy these stocks at a better price and get higher yields and whatnot. So it's always a good time to buy when stocks go down. We'll do a quick little recap of the portfolio before we get into things. So we have the personal account here, which is my one portfolio, and then we have the TFSA, and the TFSA has went down quite a bit, currently at $86,000. Let's track the past couple days here to kind of see how things have been going. So over the past day, we're down negative 2%. That's what we were kind of at today. The past week, we're down negative 3%, so fair dip overall. Past month, we're actually down negative 7%, so that's $6,000. So great time to buy stocks right now. You guys, if you guys have any free cash or anything like that, I always get questions like this. You know, do I buy now? Do I wait? What do I do? Buy now because stocks are already down a bit. Might as well take advantage. Nobody knows what's going to happen, so get these deals while you still can. And if they dip further, just buy them more. It doesn't really matter, but take advantage of it while you guys can. Over the past 3 months, we're still up negative 1%, so we got a bit of a recovery, and now we're dipping back down. The 1 year return for the TFSA is down negative 4%, which is not bad considering the fact that if we look at like VFE, for example, or the S&P 500, it's actually, I think it's down like negative 17% or something to date. So even though like the markets overall are down quite a bit because we've been investing in our portfolio on a regular basis, taking those dividends, reinvesting them, we're kind of like somewhat evening out. But of course, when things dip, you're going to dip regardless. And then our all-time return from the TFSA is 3%. And the personal account, which is more Canadian focused, should more or less be the same. We go the all-time return for the personal account, and we're down negative 3% as well. This portfolio is a little bit newer. We started it in the beginning of 2021, and the TFSA was started at the beginning of 2020. So the personal one is a little bit newer, but regardless, the portfolio is pretty much doing the same. So because markets are down quite a bit right now, we're going to be focusing on buying stocks in today's video, ones that actually have some yields and some growth potential as well. And we're going to be focusing on Canadian and US companies as well in today's video. Now, I mentioned before that I did max out my TFSA for the year, and we're currently focusing on maxing out my fiance's TFSA. That's our main goal. So I'm going to be putting a little bit less money inside these portfolios, inside my portfolios, but we will still be putting money in on a regular basis just so I can do these videos and I can build my own portfolio. But just keep in mind the bulk of our money is going inside her portfolio, and her portfolio just holds some basic ETFs, so it's nothing fancy here. So if you're kind of following that approach, just keep doing that, and that'll work good for you guys. That's what she's doing. She likes to keep things simple, while I like to kind of make a more custom-based portfolio. So that's what we're going to do with my portfolio. So inside the personal account, we're focusing on Canadian stocks predominantly for a couple reasons. Number one, I want to increase that dividend yield, and I want to make sure we're getting Canadian dividends for tax purposes and whatnot. While we wait to max out her TFSA, we'll put our money into Canadian stocks. And as you guys know, I mentioned a couple times here, Canadian stocks are taxed pretty favorably. So while I'm building out my personal account, yes, it's not in a TFSA or whatever, but you know what, at least it's going to be very, very tax efficient, and we are lower income, so that benefits us as well. We pretty much paid nothing on the dividends, and even if we sold and got capital gains, we'd be taxed very little. So it's actually pretty tax efficient, and we're going to keep continuing on with that trend as we build out our portfolios. So a couple different stocks we could buy here. Like honestly, guys, anything in the market you could probably buy because everything is down right now. We have $100 we're going to spend inside a personal account. I've been kind of looking at HYLD. Once again, we've seen that the stock is actually down 30% in terms of stock growth. That's quite a bit, but once again, this stock is focused on yield. So we could go in here, we go to dividend history, and it's now currently boasting a 14% dividend yield. Once again, we don't know how long that's going to stay. I think it's going to stay for a while, and markets, if they go back up, it'll go back down. But I think it's a pretty good time to buy some of these covered call ETFs right now. They typically perform well, and they will do well once the market starts to recover. So I think it's a great time if you guys want some good high dividend yield covered call ETFs. I think something like a nice ETF like HYLD or HDIV would be great to buy right now. You get lots of safety there, and that'll help you guys out. We can also focus on some other stocks. I'm going to actually focus on Manulife today. So Manulife is the financial corp I've been buying slowly inside my portfolio. It actually is down a little bit, 15%. Actually, let's check the 1 year return. It is down 12%. And they had a couple good years. They had a good year during the pandemic. They had lots of good earnings. They've been a good company, and the stock price hasn't really reflected that, which is kind of strange. So I think this company is very undervalued right now. They've had past good couple years, lots of growth, and they do have a pretty good dividend yield. I got it pulled up here. Manulife's current dividend yield is about, let's go down here, almost 6% with the recent dip. So if you want a nice high yield dividend stock that has a history of decent growth, decent dividend increases, Manulife definitely is something to check out. So I'm going to be putting my money into Manulife as well. So I think I'm going to go 50-50. So we'll go inside here, we'll do a fractional buy, we'll put $50 of Manulife in there, that'll go through, and then we'll buy about another $50 or so of HYLD like I mentioned. And again, honestly guys, you could probably buy anything you wanted inside your portfolios. Everything is down, everything is a good buy right now. Just make sure they're good quality stocks, and you guys should be good, and this will help increase our dividend yields and whatnot. So I'm going to put these trades through. I'm going to kind of finalize these, and those are the stocks I'm basically adding inside my portfolio. But honestly, I could buy any of the stocks. It'd be pretty good value and pretty good time to buy stocks right now. If you guys want a quick little update on my portfolio, I always like to mention in my videos, a lot of people ask me what my holdings are. I'm fully transparent on this channel. Here's my portfolio pie on Blossom Social. If you guys haven't signed up, check out the link in the description of this video. There's a referral link. You guys get a small little commission, and it'll help support the channel if you guys want. But anyways, we have about 50% split of VFE. We have VDY, and then we hold some other individual stocks here. And once again, if you guys want to see all my trades, you want to kind of be updated on everything, be sure to check out the link so you guys can sign up to Blossom Social. And as you guys can see here, everything, I don't think there's a single stock in my portfolio right now that's not in the red. I guess Canadian Tire is sitting at 0%. I'm not too sure what's going on there, but everything else is in the red over the past day or so. So quite an interesting day in the market, but I just wanted to give you guys a quick little update on that. Guys, so dividend payments for the month, like usual. We started the month with Canadian Tire giving us a dividend on September 1st of 47 cents. That is a fairly new stock inside my portfolio, obviously not giving us super big dividends. We have Fortis gave us a dividend of $9 inside Wealthsimple Trade. We have VDY, which gives a dividend of $114 as well as $21 in both of our accounts. We have Severia Corp, a stock that I'm probably going to be moving outside my portfolio as soon as the market or whenever it recovers, kind of thing. Then we have HYLD giving us some pretty good dividend payments on all our different accounts here. Quite some nice little dividend yields. And then we have HDIV. And then recently, over the past couple days, we got Manulife, which gave us a dividend stock we just bought in today's video, about $10. So nice little dividend yield there. And then ATD, Alimentation Couche-Tard, gave us a small little dividend of $2, I guess $4 or $5 or so. And this is more of a growth-based dividend stock. But once again, everything adds up, everything goes into the pool, and then we use that pool to reinvest and buy more stocks inside my portfolio. And that's basically how the system works. And if you go to our monthly dividend income spreadsheet, we'll give you guys a quick little update on the monthly income as well. This is basically me just tracking our dividends over a long period of time. We first started the portfolio in January of 2020, and fast forward, we are now currently month number 33, which is September of 2022. And now one thing I want to point out really quickly is I haven't updated my girlfriend's or my fiance's dividend income as well inside my portfolio. The black numbers here are my portfolios, and then this blue one is hers. I haven't updated hers yet. Once again, this is just my income. So we already hit $204. I would imagine with her dividend income, we'll probably hit somewhere around 250, maybe 240, 230 or something around there. We haven't added up yet. And we still have a couple dividends coming up towards the end of the month. So we're already doing pretty good. And our total dividends that we earn inside the portfolio entirely is $3,748. So once again, not a big number, but that's slowly starting to grow. And again, a lot of that is tax efficient. It's all in TFSAs and whatnot. So lots of cool things going on there. And here's the cool little graph to show you guys. If you guys are more visual people, you can see how the graph has basically exponentially been growing growing over time. And it's, once again, just putting money in whenever we have money, when we have some free cash, reinvesting those dividends, and it's slowly growing over time. One thing I haven't done recently is actually show you guys what I've been depositing inside the portfolio. And I want to show you guys just because, you know, depending on how things go, different life circumstances can come in. A lot of people commented, I actually got a comment early on, it was a while back, saying like, why during some periods of time don't I invest, or why don't I put in as many deposits in? Well, the reality is, guys, a lot of the time, you know, life just gets in the way, and this is something to understand is like, obviously in the beginning, you know, you want to deposit as much as you possibly can, and I put a lot of money inside my portfolio. Like, I really did deposit a lot of money inside my portfolio, but I just want to show you guys that, like, it's not a race. It's not about putting as much money as you possibly can. If you go down here to about, let's kind of go back down to April or so, I actually didn't put a lot of money inside this portfolio. There wasn't a lot of deposits in my account. So we have March, April, I only put $250 for the entire month. And that's just because some things happened, some things came up. I didn't have as much money. I had to take some time off for work. But I just want to show you guys, you know, it's not a race. It's not about putting as much money as you possibly can. It's whenever you have some free cash, whenever things are going good, you can just kind of slowly build up your portfolio and put it in. And for me, it's just small deposits, like $50 here, $50 there, $100 here, you know, and it's been slowly growing. Of course, in the beginning, you know, I sacrificed a lot, and I really did work hard to throw as much money as I possibly could. But, you know, over time, you have to adjust things. You have to kind of, you know, do your future calculations and see, like, at what point do you have to actually start enjoying life and living things at the same time. And it's up to you guys to decide, you know, when that is and how much money that is. So for September, we put about $300, $200. That's $500, $600, $700, with maybe also a couple $100 inside my fiance's portfolio as well. So I would say we're kind of about $1,000 or so. And obviously, like, our future projections is if we can put at least $500 to $1,000 a month inside of our portfolio, then our portfolio is going to grow. And that's basically to maximize the TFSAs. Speaking of which, I'm going to do a quick little calculation. I wasn't actually going to do this in today's video, but here I'm going to show you guys a quick little projection and show you guys what our plans are for the future. So I'm on Market Beat. We're going to be using the dividend calculator to do some kind of projections for our TFSAs. So if you guys don't know, we're maximizing our TFSAs. I have about $90,000 inside my TFSA. The fiance has about $10,000 or so in hers. She has lots of room, I think about $40,000, so we have lots of work to do. But we're just going to do some future projections here just to get an idea of what things will look like for us and kind of take advantage of those tax benefits. And of course, you know, we're going to be kind of filling out some of this information. A lot of it is just kind of like doing estimates. It's not, and everybody's going to adjust it based on what type of investment you're doing. If you're doing a growth-based investment, it's going to be a little bit different. If you're doing more of a higher yield investment, it's going to be a little bit different. But we're going to try and just make some basic kind of all-around numbers here. So we have a portfolio. We're going to be distribution frequency is going to be monthly. We're going to have drip because we're going to be reinvesting those back in, of course. Starting principal, we have about 100K inside TFSAs right now, so we'll go with that. Our annual contribution is going to be $12,000 per year because every single individual who has a TFSA gets about $6,000 per year. With two of us working together, that's $12,000 of room. That's about $1,000 per month. Now, I know that's a lot of money, and we might not even hit that every month, but if we can hit a minimum of $500, and obviously you kind of want to maximize it if you can, $1,000 is a good number, but definitely doable with two people, especially if you're good with budgeting. But again, you know, even $500 a month can make a significant difference. We're going to go with 12,000 just to kind of be aggressive here. Our dividend tax rate is going to be 0 because it's in a TFSA, right? We'll go 0 with that. Annual dividend yield will be about, we could go about 4 or 5%. We'll go 4% because that's a little bit more what you'd expect. Annual dividend increase, you could go like 10, 12%. We're going to be conservative. We're going to say 7%. And our annual share price appreciation is going to be 3%. Once again, we could be a little bit aggressive, and most likely we will probably earn more than that, but we're going to be conservative. I like to be conservative just in case. We'll calculate the dividends, and we will see what our TFSAs together, right, will look like in the next 10 years. So this hopefully will inspire you guys. I know a lot of you guys, like, people get worried about, like, you know, rising interest rates and cost of living going up, but here's something that's really, hopefully this will inspire you guys, and this kind of helps me kind of just settle down and kind of relax at the end of the day, because I know you can get kind of worked up with everything that's going on. So here's the calculations over the next 10 years. So for the next 10 years, we will have a new balance of $389 inside of a TFSA. That's pretty significant. 300, about 400K inside of a TFSA with pretty conservative numbers if we keep doing what we're doing. And that's pretty crazy. Now, if we look at the annual dividends, this is about $4,000 for year one. So even in year one, you're getting about $4,000 a month. That's $400 tax free. You know, and every single year you add a little bit more here, and at the end of the year you're gonna get about $20,000. $20,000 tax free is, I guess, about like let's do the math here. Let's go grab a calculator. I'll bring this up here so you guys can see. $20,000 divided by 12 equals about $1,600 tax-free inside your TFSA. Pretty crazy. You could spend it, you could save it, do whatever you want to do. That's going to actually be a lot of money, you know, especially when it's in a TFSA, right? Like the after-tax dollars, that's like a job working like maybe, I don't know, like, you know, it really makes a bigger difference when it's tax-free. And then we can see the actual principal increase as well. So $10,000 in terms of gains. So you'll actually be getting about 30K. 30K is, I don't know, about like minimum, more than minimum wage, I would say, full-time job. So that's pretty significant. But I just want to show you guys, you know, like play with these numbers. You can kind of go longer too. So if you wanted to go over the 20 years period, we could say like, or even 15, let's go with 15 years. So that'd be like 45 or something, you know, kind of approaching retirement. Maybe we're kind of close to that. And we could have a TFSA value of $600,000, making us $43,000 in dividends and about $18,000 in stock gains. Once again, wouldn't actually look like that on a year by year basis, but, you know, averaged out over time, we can see, you know, your TFSA, if you take advantage of it and you really focus on it and you use it correctly, you can really use it as a great retirement tool, or just a tool to kind of make your life a hell of a lot easier. And that's basically what we're doing. So just wanted to show you guys, definitely, you know, plug in your situation, plug in your numbers, and kind of play around with this, because it's a great way to see how your money will grow and how you can use advantage of it in the future. Alright guys, so that's it for today's video. I hope you guys enjoyed it. Like usual, let me know what you guys think in the comment section. I hope you guys have yourself a good week. Remember, just keep plugging away, keep going at it. You know, take a break. You know, sometimes when you watch the markets too much, you can go a little bit crazy. It can drive you a little bit nuts. So, you know, go outside, have some fun, you know, spend some time with your family and your friends, and just, you know, to get your mind off things. It always helps me, and I think it's always a good thing to do. So anyways, guys, I hope you guys enjoyed this video. Take care. I'll see you guys later. Have yourself a good weekend, and bye-bye.